What's up, Banter fam? It's your host, Miles, and welcome back to the Sunday show. In this stream, we obviously research altcoins, look for altcoin gems. I answer lots of questions, and we will do a Q&A, as well as giving you guys a big market update, because there is a lot to talk about right now with where Bitcoin currently sits after getting rejected from its range high. Clearly, there's a lot of fear in the market. We had some big news related to PCE on Friday, which I want to go over and update you guys to as well. And also, I want to talk about a few major things that happened over the weekend. For example, the Solana network getting restarted, as well as touching on some of the narratives we talked about last week as well. So hopefully this video can be entertaining, informative, and also, we can have a good, fun, chill session together and research alts at the end. And just have a good time. If you guys have been joining the Sunday streams, I appreciate it. It's been a lot of fun. Actually, my favorite stream to do every week, because they're super chill, and we get to research altcoins and do what we love doing. So today's stream might be slightly shorter than the usual ones. Usually I've been going for like 3-4 hours. Since we had to kick off late because Sheldon wanted to stream earlier, I might limit this to like an hour and a half to 2 hours. So maybe slightly less research today, but last week was absolutely crazy. We did like 6 hours. So I'll keep it a little briefer today, but of course we will still get into all the alpha and all that sort of stuff as well as charting your altcoins that anyone wants me to have a look at. Thank you for joining, everyone. I just want to say hi to everybody in the chat. Robin is here. I see Scott as well. Crimson. I also saw Chaos, David, all the regulars, Chris, Timberland, you were here last week. Thank you for joining again. You said Miles always seems to be on the money. I think we should call him the =𝗏𝗍𝒻. I like that. A little bit of a pun on my last name there. I got £20 to spend today. Show me the money. Yeah, we can have a bit of fun gambling on some shit coins potentially. That's something that we definitely do in these Sunday streams. So yeah, I think the first thing I want to do before we get into all of the fun stuff, high definity as well, is look through the Bitcoin chart and see where we currently sit, because clearly there's been a lot of volatility over the past few days. So I think it's important to recap exactly what has gone down over the last few days, because I haven't talked to you guys since Thursday, although obviously Rand and Sheldon have been on to update you. So we did have a major rejection of range high. It's a range we were testing for quite some time, but we clearly failed to break out of, and off the back of some negative macro news in relation to a slightly hotter than expected PCE, the market did have quite a significant pullback. So I think now we have to kind of reassess where we currently sit. What's the probability that we're going to come back to test range high and potentially break even higher, like we thought could happen before? Or is this simply the new formation of a new range, and Bitcoin might go sideways for a while or potentially come down and test the next level? Let's kind of attempt to decipher that through what the charts are telling us right now, and then I'm going to use that in confluence with what's happening on a macro point of view to give you some insight into what's happening on the macro side. So right now, Bitcoin has entered a pocket that was pretty significant in January. So we saw when we did make a range in January between 22,327 and 23,324. This was an area that was very crucial for Bitcoin to break out of to make its new high, which obviously it did make around the 25K region. But interestingly enough, despite this being a range that we adhered to until mid-February, Bitcoin did break down and test what is now going to become a very key level of consideration, which is the 21,500 level. Then, of course, we all know what happened. Bitcoin shot through that level and also shot through the previous range to test 25K as the market reacted pretty strongly to the CPI data. As people were starting to anticipate potentially, as inflation's coming down, there could be rate cuts. And we did see, of course, the stock market bounce off the back of that CPI. And although it was kind of a bit of a relative strength bounce for crypto versus the stock market, everything kind of went up. So obviously that kind of ran out of steam, has now come down back into this initial range. So in terms of structure, I'm seeing a lot of panic. I'm seeing a lot of fear in the market, especially on Twitter. What I want to say is, we do have to zoom out a little bit and look at general market structure. Maybe this is much easier to see on the daily than it is on the 1 hour or the 4 hourly chart. And that's, look, we are still technically exhibiting bullish price momentum, even though we have lost a little bit of momentum, especially on the altcoins, and the likelihood of that big 25K breakout is much, much less now. In terms of general market structure, things aren't looking too dire. We have one very key level, which is this 21.5 K level that I mentioned before, that is going to be an extremely key level of support for Bitcoin to hold. Now, I don't necessarily expect us to come down and test that in the short term, but just know in terms of major market structure, in terms of working out exactly where we sit in the range, the mid-range at 21.5 is very, very key. And of course, you do have our previous range low at 15.5 to 16K, which was the bottom of the range. And obviously, the range high is 25K, and that's the level that we tested and got rejected off. So the next level to hold really for Bitcoin is the 21.5 level. And that level is going to be the level that needs to hold for Bitcoin to continue to exhibit what has been bullish price momentum and continue to push up to this 25K level, which could result in that breakout that, you know, I know a lot of traders, especially on the bullish side, want. But it's very important in trading not to be too stuck to a particular bias, you know, not be too positioned for the bullish side of things and not be too positioned for the bearish side of things, and keeping a very probabilistic mindset to approaching the market. So when I'm making a trade, what's the probability that we end up going to the upside? What's the probability that we end up going to the downside? And then basing your risk, so basing the amount that you put into each trade accordingly. Because in crypto, nothing is for certain. There's no certainty we're going to come down and test 21.5, just as there's no certainty that we're going to break above 25K. So it's very important to think probabilistically, and that's going to help you make better trades. Now, of course, long term, our long-term thesis hasn't changed, and I've been quite firm on my long-term approach to crypto, in that I'm not buying long-term spot right now, and I'm using this as an opportunity to narrative trade, and I'm using the strength from the market in relation to altcoins, so taking into account Bitcoin dominance to affirm how I'm weighting myself in different altcoin sectors. But those trades are with a short to medium term mindset. They're not with a super long time horizon, because that isn't the phase of the market we're in right now. I don't see this as being crazy long-term accumulation on small cap and mid caps right now. I see this as accumulation on great assets, solid assets like Bitcoin and Ethereum, maybe some of the top L1s you could put into that category as well. But in terms of assets that are slightly riskier in their risk profile, so the medium and the small caps, this isn't the time that I'm accumulating. And of course, everyone will have a different plan based on your risk tolerance, your financial goals. But that is just my plan, and that's the one that I've been sticking to for the past few months. But it is a lot of fun to trade altcoins in this market. So of course, in today's show, we're going to go over some of the alts that could potentially perform the strongest if Bitcoin does clear some key levels. So what are the key levels that Bitcoin would need to clear to get back in the bullish swing of things and look for a potential test of range high? So we know that 21.5, as I mentioned before, that is the lowest Bitcoin really wants to go. So yeah, sure, there is a chance we do come down and we break and we test this level. As I said, I don't think the probability is there for that happening, but there always is a chance. So we have to factor in that potentially it can come down and test 21.5. And it probably will end up doing so over the next 4 to 5 months, but we don't know exactly when. You know, Bitcoin can go up to 26, 27, 28 to 30K before it comes down and tests 21.5. Like, that is also a strong possibility, and that can definitely happen. But in terms of how we're trading in the short term, in terms of looking at our altcoin plays, a lot of that is going to rely on short term Bitcoin and Ethereum price action. And right now, I think a very key level for us to clear in the shorter term is this 23.3 level, because that, if you guys notice, was the previous highs of the range that we set in January. And if you can break above that level, then you start to look a bit more positive in terms of reclaiming 23.7. And if you break 23.7, then of course you are starting to make a higher low, and a higher low would indicate to me that we push up to range highs. So what would that look like? Well, obviously it's a break of 23.4, hold, a push up to this level, and then look for that reclamation and making a higher low. So this would be the higher low in comparison to the other previous lows that were set in that uptrend. So that would essentially reverse what is quite, I guess right now, or at least looked like a few days ago, quite a scary downtrend. So that would be the major reversal indicator for, okay, if we can flip these levels and start to hold, then that's an indicator to maybe get back into risk in the shorter term, for all the shorter term narrative and altcoin traders out there. And obviously this TA is all going to depend on your time horizon, right? If you're trading short term, you look at the shorter time frames. If you're trading long term, you'll look at the higher time frames. Then obviously a break to the downside would indicate that the 21.5 level is a significant level of liquidity that we could drop down to. So if you start to get this break down, then you do start to look at that as a target. You have multiple zones to bounce in, like 22.3, and of course the 22.8 level, which did hold. But if you start to break down, retest, then that's a sign of, okay, let's stay de-risked, or let's de-risk a little bit more and look to re-enter some positions maybe a little bit lower. So that's my general plan with Bitcoin. But of course, I'll get a bit more into depth with like specific altcoin plans later in the show. Chaos said we could still just range. It's definitely a scenario as well. Like technically we are still ranging. So like I don't really get all the panic over like a little drop in Bitcoin. And I didn't necessarily get all the euphoria either when we had significant pumps in Bitcoin, considering we are still just basically sticking to what is one big range. And obviously you have mid-range, which gives you a bit of an indicator as to how we're going to perform in terms of, is the general market movement going to be attracted to the range high zone, or is the general market movement going to be attracted to the range low zone? So the mid-range is super important because it gives us that indicator of which direction the market is looking like going in. But in general, so generally speaking, irrespective of the mid-range, yes, we are technically just ranging, and we have been since November. And you could make the argument we've been ranging since, August, but obviously the lows weren't set, just the highs were set. So yeah, of course, you could do something like this where you just range in one big sideways formation. But of course, the longer you range for, the more explosive the breakout is going to be to either side. And considering 15K, in my opinion, is, I mean, a breakdown of range low would be doomsday for crypto, but I just don't really personally see it happening. I think the likelihood of a break out of range high is eventually going to be higher. But of course, that doesn't mean we can't come down and test range lows eventually. But of course, this whole range theory does become invalidated as soon as you do get a breakout and confirmation above. And until we get that, then yeah, technically we are still in the range and we have to trade as such. So you're going to get periods where we're exhibiting bullish momentum in the short term and altcoins explode. And we have these little cycles of euphoria. And then you're going to have periods of bearishness, like we've seen over the last few days, where people start to sell off and the market starts to get fearful and the market starts to panic. And that is obviously when you look to de-risk a little bit and maybe look for a lower entry on a dip. And then you use your shorter time frames to use as confluence as to the exact points that you'll be entering some of these altcoin trades. And in combination, by using the short time frames and the higher time frames, that can help you a lot more when it comes to narrative trading. But as you guys know, I'm a very, I have a long-term mindset on a lot of my portfolio. So like the majority of my cash, like the percentage of my total crypto investments are more skewed towards long-term holds. And obviously cash, you guys know I'm pretty cash heavy right now. I have a lot of stables. And then that smaller percentage is where this stuff starts to kick into play. So in terms of all this movement in the shorter term, the altcoin narrative stuff kicks in when we're looking at the shorter time frame. So of course, like all that fun stuff we were doing with AI altcoins, Chinese altcoins, trading LSD coins, trading the ZK narrative, that those kind of plays can make you a lot of profits. And we've seen it over the past few weeks when we've hit amazing trades on perp dexes, but those trades are with a very short-term time horizon, and it's important not to get them confused with long-term trading. It was logical that this was not an Asian-driven bull market. Don't follow the FOMO. It wasn't an altcoin. It wasn't an Asian-driven bull market. And I mean, this isn't a bull market. This is what could potentially be an echo bubble, but for lack of a better word, I'm going to call it a bear market rally. Like it certainly is a bear market rally. Yeah, I don't think it's like a crazy new bull market or anything. But what Asia did was inject some liquidity into specific tokens, especially the Chinese tokens. That was where we saw the majority of the Asian influence. And also this final push up post the initial Bitcoin dip from range high was largely driven by Asia. That when we saw like significant volume kick in on the Asian side versus the US side. And of course, the Asian altcoins were the major beneficiaries of that. Someone said, who took a short with me around 25? I remember you, Nepal, last week. You said, I'm shorting 25K. And this week, we sit back and we really have to give you props because you nailed it. You nailed the short. And it's funny because I actually said on the stream, I'm not a big shorter in this market. Like, I don't really focus too much on leverage shorting. I just think it's a risky game. Shorting crypto is very difficult. So that's not really how I trade. what I prefer to do instead of shorting is going out of risk into cash. And going out of risk into cash is selling, and in essence, shorting is selling. You're just using leverage to initiate the short side instead of like using spots. So technically, I did de-risk some of my altcoin positions, which I guess it could be considered a short, but I didn't leverage short it. However, 𝗏𝗏𝗍𝗏 was spot on with his leverage short. And obviously, you would be up right now if you took that short 7%, but it wasn't something I was necessarily advocating for, because I'm not really a huge shorter in this market, especially not leverage, because it's easy to get blown out. But if you are a short-term trader, then this range high is just a lovely place to short at the moment. But it's going to be quite a while till we come and test again, because like Bitcoin really needed some explosive momentum to break through range high. I see it now as becoming more difficult as time goes on to break through that level, because time pressure typically starts to invalidate some of retail's hype and invalidate some of retail's propensity to buy dips. So the longer you kind of fail to break above a certain level, the more skeptical people become of breaking that level, and that feeds into obviously people starting to take profits on positions that potentially they were underwater in as soon as you get pumps, which means it's harder to break through range high. Which is, I think it's going to make it a lot more difficult. So I think any timeline any of you had on a breakout, I think has been pushed back by a few weeks. But there's a lot of macro stuff which is playing into things, which I think I need to touch on now, because this isn't just a crypto dip in isolation or a crypto pump in isolation. It's completely macro driven. China must be broke. They didn't put that much in. I mean, China's initiating some form of QE, but I think what people are under, or maybe overestimating actually, is the effect that Chinese QE has on Western markets, because there's no direct liquidity flow from the East into the West. And although you do see leakages through certain areas of their terms of trade, for example, exports and obviously like online services, you don't see the direct impact until it's already happened. And because there's lots of barriers to entry in terms of Chinese investors investing in the West and crypto specifically, due to their law and how investing in foreign assets is structured, the liquidity outflow doesn't become as linear as, China printed $1 trillion, so the US is like, that cancels out the US's $1 trillion. Like, that's not how it works at all. In fact, it's like a fraction of that. So yeah, I do think a lot of the China stuff was like maybe a bit overhyped, but at the same time, we're going to need to see how it plays out, because China can keep printing money and some sort of leakage is going to happen. And at some point that's going to affect markets positively. And we just don't know to what extent Western versus Eastern markets will be affected. So right now, what's actually affecting the market more is PCE. And you can see it on my screen right now is the PCE data, which is the consumer expenditure data. Now, essentially, the data came in 0.2% hotter than expected. So what it showed was a re-acceleration for both month-on-month PCE and both year-on-year PCE. So although PCE lags CPI, it adds additional pressure. So CPI is a leading indicator. PCE is a lagging indicator. It comes after. But despite the market reacting positively to CPI, I think the PCE data coming in hotter than expected shifted the anticipated rate hike slightly. So it slightly increased the probability, as you can see here, of a 50 BPS rate hike in a month. And that 50 BPS rate hike in a month, now being priced into the market, has markets a little bit scared that the Fed is going to continue on an accelerated pace of hiking rates. So if the Fed continues to hike rates at what is a slightly increased anticipated pace, and it's not much, but it is kicking in 27% more than it previously was expected, then that's going to put some pressure on risk assets. And the FOMC meeting isn't for another 25 days. So there's quite a lot of time now between, well, I guess when the FOMC is and how the market is going to anticipate that FOMC. So it makes the next month a little bit more uncertain. And that's probably why we did see a sell-off, because markets have realized, okay, maybe this so-called pivot is a little bit further down the road than we thought it was, because inflation isn't coming down as much as we thought it was. So let's just chill out a little bit. We've been overly buoyant. Equities, I think, like, unequivocally have been overly buoyant. Like, there's almost no argument they've been overly buoyant. And I still think macro-wise, they still are overly buoyant, considering what you're facing in terms of, like, an extended rate hike cycle, not only for the next few months, but potentially much longer, that could result in, like, a 600 BPS interest rate. That's going to put a lot of pressure on markets. So that's why my thesis has kind of been, let's stay relatively thin on the long-term spot side of things, see how all this plays out, and then we can always re-enter, rather than getting too crazy, like, risk on now when there's still headwinds to come. Now, as I said, everyone's trading strategy is different, but that's why I'm so heavy cash, because I'm trying to protect myself against that. That has no bearing on what I do short term, though. Short term, I'm a shitcoin trader. I love trading alts. I love I love getting into new narratives. I love trading. Like, that's really fun to me. And this show's all about researching alts, right? I just think it's important to not confuse how we approach our altcoin fund stuff, like our short-term making money stuff, and our long-term general outlook on crypto. And this is actually a frustration of mine I have. I do streams and I say, like, I might allude to something being, I might allude to something having good potential in the short term. I might allude to being bullish on a specific project. I might allude to myself loving a narrative, but people take that as like, oh, Miles was bullish on AI coins. Let's ape into those AI coins with like a 2-year time horizon. It's like, no. It's like, if I'm bullish on AI coins, that doesn't mean I want to hold them forever. And that doesn't mean I'm buying them now for the next 3 years. It's like, a lot of the time it's simply a trade, or a lot of the time it's simply positioning in terms of like one outcome taking place. For example, like, I think Bitcoin will break this level. I think dominance will shift back into alts. These are the best alts to get into. This is how we play that trade. So maybe I could do a better job at specifying timeframes just to alleviate any confusion. But I think I have in the past gotten the point across well enough for you guys to know when something is a long-term position and when something's a short-term position. Or at least when something is more of a rotational trade versus when something's a long-term trade. So I guess I'll just keep reiterating the fact that I'm pretty heavy cash, and that will get the message across. Someone said FUD. Well, let's get into some of the data then. Let's get into the 𝗔𝗘𝗵𝗵𝗍 thread on this PCE stuff. I think this will give you guys a bit of an insight as to where we sit from a macro perspective. Exactly. You should always have cash on the side, triple money. I probably sit anywhere between like 20 to 40, sometimes even 50% cash. I think right now maybe I'm like 30 to 40, which is pretty heavy. Most investors, most like traditional investors in the stock market, usually like 10 to 20%. And that's like a decent cash weighting. Why am I higher than that now? Because I think the current market conditions are the most unprecedented they've been in years, in my opinion. Like, we haven't really had unprecedented money printing combined with unprecedented quantitative tightening, all happening in like a weird stagflation environment, with like global political tensions. It's kind of like, all right, you have to weigh up what's the risk reward of me being in the market for the long term right now. Is it good? Is it bad? Now, maybe you push the time horizon out to 10 years and it's like fucking fantastic. Ethereum's going to be $10,000. Like, how great's that? But then you kind of shorten that time frame a little bit, maybe to 2 or 3 years, and you realize, well, the risk reward isn't great. Someone said worst accent. I don't know, bro. I've heard worse. I think some of the South Africans are worse. Just personally. Someone said cash is trash. This is actually a great comment, 𝗟𝗍𝗄𝗟𝗍, because that's something I used to think all the time. Probably, like, I'm 23 now, or turning 23. Technically 22. But am I 23? No, I'm 22. I'm forgetting my own age. I'm crazy. Like a few years ago, probably like when I was like 18, 19, probably a little naive. I've been trading stocks since probably like 2016, or at least like, I'm interested in the stock market since 2016. And then obviously crypto got into like 2017. I used to think that as well. I used to think cash is trash. So I would often ape in large percentages of my cash balances into the market to try and like protect myself against inflation. And I would often disregard the preventativeness of having some sort of cash backstop in pursuit of crazy gains. And that's something that's like a mentality I took with me into the bull run. But what you start to realize is there's always new opportunities in this market. There's always a chance to make more money. There's always going to be a new trade. There's always going to be a new wave to catch or a new wave to ride. And having cash isn't necessarily the worst thing to be able to catch that wave. So I felt more comfortable as an investor holding more cash, and being less worried about like inflationary risks than trying to go all in and basically have no backstop if things went wrong. So cash is trash and cash is king at the same time. Were you interested at 14 years old? Oh, thank you. Someone said the accent's cute. I was not that interested at 14. I mean, crypto, when I was 14, what's that, 2014? Crypto was like not really a thing. Like Bitcoin was around, but you had no DeFi, you had no Ethereum. You just kind of had Bitcoin. You had some kind of like projects launching, a lot of proof of work stuff. Proof of stake wasn't really a thing. So yeah, I wasn't really interested then. I wasn't really interested in stocks either because I was 14. But what I was very interested in is, to be honest, FIFA, video games. But then also, I was always interested in making money as a kid. I've always been somewhat entrepreneurial. I think when I was like really young, I was always like starting like stores and I even did some e-commerce when I was 14. I did drop shipping when I was 15. I started a YouTube channel when I was 13, 14. I had different channels about different things. At one point it was like FIFA, and then it moved into like music. And then obviously now, I found my passion, which was crypto and investing. So I think things kind of eventually colluded or aligned and resulted in what I'm doing today. Boy, genius. I mean, I don't really think I'm a genius. I just feel like since I've been in the market for so long, I mean, it's still not that long compared to some other people. Like I know people that have been in the space since like 2013, but since I've been somewhat aware of the space since 2017, 2018, which is like 5 years, and probably in tandem with a propensity to like, or a willingness to learn, and obviously like some sort of natural ability that's like really helped me kind of pick up DeFi very quick. And it's helped a lot with the altcoin stuff, which is obviously still my forte. But I just think right now it's important to like contextualize where we sit with macro news and macro data instead of just going pure altcoin shitcoin mode, which obviously we're going to get into at the end of the video, and we're going to get into alts and all that fun stuff. But I think I'm kind of starting with the boring stuff to really frame where we sit. So let's go through Jim Bianco's thread now. He said, what does this mean? So what does the PCE data mean? He said an acceleration in rate hikes, no pivot. Remember the Fed headline this morning? This means a 5.5% funds rate at the June 14 FOMC meeting is now priced in. Fed swaps fully price in rate increases in March, May, and June. And beyond that, the probability of a 5.75% at the July FOMC meeting is now 38.5%. Add all the probabilities, 550 to 575 and greater. And 575 to 6 in September, options are soaring in open interest. So what does this actually mean in layman's terms? Well, essentially, the likelihood of a 6% interest rate by September is significantly increasing in how the market perceives the probability of that happening. So, and you can view that through open interest in options for call options. Call options mean like an option to long something. Put options mean an option to short something, basically, essentially, or sell something at a given date. So open interest for that is increasing, meaning people are expecting continued rate hikes. And essentially, what Jim is taking from all this is that the Fed has 100 to 125 BPS more hiking to come related to this red headline. US Treasury 2-year rises to 4.8, highest since 2007. Why is the 2-year Treasury yield rising? Because when the price of money goes up, interest rates go up. And clearly, when interest rates go up, you can earn more money in assets like bonds, which are interest bearing. Whereas risk assets like crypto, they really perform better in a low interest rate environment. Why does crypto perform better in a low interest rate environment versus a high interest rate environment? Because in a high interest rate environment, you have alternatives like bonds, which can pay decent yields. But in a low interest rate environment, you're starved for yield via traditional means. And when you're starved for yield, you have to chase it somewhere. And a lot of people chased that yield in crypto, and specifically DeFi, which is what resulted in that huge DeFi boom in 2021 and obviously 2022. So we're entering a tougher environment, so it makes long-term, it kind of makes 2023 a weird one in terms of how the markets react. Of course, we can see huge breakouts, we can see huge breakdowns as well. And in the short term, anything can happen because the market's quite reactive. So you might get a little bit of good news and the market might pump, and you might get some bad news and the market might swing. I think the major takeaway here is, given the volatility of the macro environment, don't position yourself with the sole outlook of one directional outcome taking place. AKA, don't bet it all on long and don't bet it all on short, because the volatility can wipe you out if your time horizon isn't extremely long, not extremely wrong. So, especially if you're using leverage, it's very easy to get wiped out on the shorter term. So you have to be very careful, especially when you're taking these narrative trades. They're really just like swing trades, right? You have to have a very predetermined time horizon on those trades for them to work out. So on that point, on the discussion of narratives and altcoins, let's look at the Bitcoin dominance. The Bitcoin dominance is increasing. The Bitcoin dominance has bounced off this diagonal rising trend, and it looks like it is like continuing to exhibit bullish momentum. Now, what does dominance going up means? It means that Bitcoin is being favored over the altcoins in terms of its percentage dominance on the entire market. So if we look at what this may mean for Bitcoin, it can mean two things. It can mean a dump's coming, and then obviously like Bitcoin holds up better than the alts. What it can also mean is that the next pump will be led by Bitcoin. So I see dominance going back into this 44.2 to 44.5 region. If that happens, Bitcoin is likely to lead the way in terms of relative strength. And unless we get a breakdown, I would look to be more, it really depends on how you trade, as I said, but I would look to be more positioned in Bitcoin versus alts until we get a breakdown. So I think for alts to really explode, and like my trigger to like go long into some like really risky alt narratives, would be a breakdown of dominance. And then that push to 43.2 would be a potential catalyst for alts to perform super, super strongly. That may not happen. And until the trend is broken, the trend is your friend until the end of the trend. And the trend is showing us dominance, at least on the 4-hourly, is increasing. So it very well may continue to push up. And this is actually what I view as the higher likelihood play. And that's that dominance goes back to the 44.4 region. And if that happens, then Bitcoin is going to lead versus many alts, even Ethereum. So being really, really heavy in alts right now, at least if you're a short-term trader, so like, yeah, short-term trades, there's no real signal to like ape into alts right now for me. And that means like today, like right now, because you're going to see like a major move in dominance likely coincide with a breakout and consolidation of the 23.3 or a breakdown and a retest of this next zone, which is 23.8. Like we can see that was like a significant level, especially back in January. And of course, like you do have those lower price targets as well. And those lower price targets would likely coincide with like an absolute dominance rocket. Like if we hit 21.5, dominance will do something like this. And then like it's definitely not altcoin time. So let's see what happens to dominance. It's going to be a very important indicator to watch in terms of substantiating how we trade the altcoin narratives. Of course, the breakdown is what you're looking for to get into alts. So that's how I see dominance in alts right now. So let's reiterate what I was talking about before in terms of time horizon and market strategy, because I know a lot of you might feel lost, because it's a tough market to trade. It's not really a trader's market. It is like a narrative-based market when things are doing well. So when Bitcoin's exploding, narratives perform really well. But it's not really like the best traders market. Like day traders are struggling. Unless you're a range trader. Like range traders are doing really well. Like XO and SC did really well shorting the top of the range on Bitcoin. And they've been doing really well longing the bottom of the range as well. So unless you're a range trader, it's been difficult. For narrative traders, it has been better. But I think it's important to have a discussion now on like what our strategies actually are, because it's very easy to get confused and chopped up in this market. And then after that, I want to go into the Coinbase discussion. So talk about their new L2, how that will affect the market, give you a TLDR on the show I dropped on the weekend. Then I want to go into Solana, and then we're going to get into altcoins. That's the plan of the show. And then obviously I'm going to do a lot of questions at the end. So let's go into the strategy now. I did this tweet draft and I just screenshotted and added it to my Chrome browser. And I said, before you invest a single dollar in a project, clearly define how long you plan on holding that investment for. Too often, I see people confusing short-term trades for long-term holds. Now, I don't want to go too much into this again because I've already talked about it, but when you buy an altcoin on an Excel spreadsheet or a piece of paper, I don't care how you measure it, but just make sure you're measuring it. Before you buy that altcoin, define the time horizon. Don't define the price target. I mean, obviously that's a good thing to do, but even before you define the price target, even before you define your trade invalidations and trade validations, validation is obviously something bullish that you would like to see happen on a fundamental level for you to put more into that trade, or an invalidation is something you would look at and that is an indicator for you to de-risk. Before you put any of that down, define your time horizon. So on an Excel spreadsheet, literally have, I am buying Solana. My time horizon is 2 years. My invalidation is Anatoly leaving, I don't know, price dropping to $5, transactions dropping to four transactions a day. I don't know, like I'm just speaking randomly. Write your invalidations and write your validations. So TVL hits $1 billion, NFTs flip, Ethereum, I don't know, like have validations as well. But more importantly, have that time horizon written down. So the amount of years or months or days you plan on holding an asset for. Because too often, I see people confusing short-term trades for long-term holds. It happens so often. So like, for example, 2 weeks ago, AI coins were pumping. Everyone wanted to get into AI coins off the back of a rally because of the ChatGPT news. Was a 200% pump the optimal time to buy 𝗏𝗏𝗏𝗏 and AJAX for a 2-year time horizon? Probably not. Probably not. Could be, but probably not. Probably not great risk reward. Was looking at altcoin setups for the most explosive narrative in the market, aka AI, at that time prudent? Yes. Because those setups can make you more percentage gains relative to other narratives. So the thing with narrative trading is you always want to be in strength, but you need to know how long you want to trade that strength for. Because just as quickly as narratives come, they go. Someone said my hair's on point. You know what's funny? This is like, it just is like flopped into place because I just had a shower, but I appreciate it. Usually I'd wear it differently, but maybe I'll just keep it messy. And I need to shave. It looks terrible. It actually looks shocking. So apologies everyone. But I just came back from a holiday actually. I had a nice weekend down in the country. So yeah, had a lot of fun. Down like near Lawn. I don't know if anyone goes like Great Ocean Road. But that was, yeah, it was a nice weekend. But I'm back now. I actually just got back. I was super tired, but I thought, fuck, I got to stream. I got to stick to this Sunday schedule because I want to be consistent, and a lot is happening. And I think like it's time that we have a conversation because a lot's happened in the market, and I'm seeing like a lot of divided opinions and stuff. Grow a beard, Chaos. With all respect, my facial hair game is that bad. There is no chance I could grow anything more than a complete mess. Like I'm at least like I'm 22. I'm at least 3 years off. Oh, maybe even 4 years off by the look of things. Like any sort of beard, I'm at least 4 years off any sort. Like this is really just crap. This is really crap. Someone said, bro, no to shave American girls. Love the scruffy look. Yeah. Maybe some do, but I think most don't. We are talking about alts. Of course. But the way I wanted to progress through the show was talk about Bitcoin, macro. Now we're talking about portfolio construction. And then we're going into Solana, Coinbase, and then alts, and then Q&A. That's the... Yeah, you're right. 35. I'm never going to grow a beard, let's be honest. Let's talk about alts. Yeah, we're going to talk about it. We're going to talk about it, guys. We're going to talk about it. Love the Sunday live. Appreciate it, Robert. It's a lot of fun. I really, really enjoy these. And we'll do charting and all sorts of stuff. But I'm just kind of like, yeah. So basically what I was saying is, look, it's very easy to get confused in terms of time horizon, but make sure you set it because, as I said, with the AI narrative, a lot of people got burnt. Same with, and I don't think it's dead necessarily, by the way. I think there's still enough relative strength there to see AI perform if Bitcoin performs. So I'm not saying it's dead. In fact, I actually think AI is like a very good narrative to look at still because of its relative strength and because some of the charts are looking like pretty good. Like they've had pullbacks, they're consolidated. We've got some big news related to FET. They had a partnership with Bosch, which they announced, like the engineering company. And then, if Bitcoin performs well, they can perform well. But I was just using that as an anecdote for like what happened 2 weeks ago, right? This is fun. I'm glad you're having fun, Steve-O. I am as well. I love doing these lives. Much more chill than the weekly lives. I like it. But yeah, time horizon so important. So that's for that's like a general strategy that you can use to like at least be more mentally clear over your framework. But then the question is, what is my portfolio construction looking like? So that question's divided up into 2 categories. One, what are the weightings that I am using towards risk? So what are my small cap weightings? What are my mid cap ratings? And what are my large cap weightings? That's the first part of that question. And then the second part of that question is, how am I going to differentiate between trading, investing long-term, and investing short-term? So first is risk, overall risk, and that risk is across all of your time horizons. And then second is your time horizons and your split versus trading versus investing. Now, on the first kind of topic, in order to work out how like aggressive you're going to be weighting your portfolio, you have to determine exactly what strategy is going to work best for your needs. Personally, I think the barbell strategy is amazing. And I'd never heard of it spoken as the barbell strategy until 𝗟𝗍𝗍𝗍 did a tweet on this a couple of weeks ago. Like I never heard anyone talk about it because I just wasn't aware of the lingo. But what I realized when I was pondering this today was I've actually used the barbell strategy for the last 5 years to like a large degree of success. And I never realized that I was using it until today, basically, or yesterday. Because I actually thought, like it was just something I did by like intuition. But it wasn't something I actually did because I was like following a strategy. So I'll talk to you guys about this now, what it actually is and how I use it. And this is the strategy that like the greatest investors, like even Warren Buffett to an extent, implemented in sectors of his portfolio. And it's a strategy that a lot of my most successful friends and peers have implemented into their portfolios. So basically what it is when you invest, you allocate most of your capital, so 80 to 90% of your capital, towards conservative investments. Now, you can obviously apply the barbell strategy to your entire net worth, or you can apply it to your crypto portfolio. So there's two different discussions. So if you're applying it to your whole net worth, then hyper-conservative would be cash and bonds, and hyper-aggressive would be crypto. Or if you're applying this to your crypto portfolio only, and you can do both, but if this is just crypto, then hyper-conservative is Bitcoin and ETH, and then hyper-aggressive is like, I don't even know, like something below 10 million market cap, and there's a lot of them. So, or like a meme coin or something. So essentially, this doesn't work for everyone because some people have less capital, and when you only have, let's say, $2,000, $3,000, $4,000, $5,000 to invest, you're gonna need to have like maybe one more plate on the hyper aggressive side if your goal is to make like $100,000 or $1 million, because you just won't get there investing conservatively. But for most people with a decent amount of cash that want to protect capital, which is probably the bucket I put myself in, the barbell strategy is really, really good. Now, the interesting thing about the barbell strategy and the unique thing about it compared to other strategies is you don't put anything in the middle. So you don't go medium risk. You just go aggressive and conservative. So let's contextualize this in crypto. Okay, hyper conservative, Bitcoin ETH. Hyper aggressive, I'm struggling to think of examples, but like you could like say, I don't know, Moonbeam, Moonriver, like some stupid meme coin, like Flocky. So they're the two extremes, but then the middle you avoid. And what is the middle? Well, the middle might be Chainlink or Quant or Algorand or BNB or Cardano. Those might be the middle. Or maybe Cardano's like a bit safer. I would say the middle's maybe more in like in this range here, in like the 20 to 30 range. I can hear myself talking on my stream, which is annoying. But yeah, I would say it's more in the 20 to 30 range. So if you're applying it to crypto, then you go mostly hyper conservative. So Bitcoin ETH makes up the majority of your portfolio. You avoid the middle stuff, and then you go hyper aggressive on small caps. That will be how you employ it. For me, I don't just employ it crypto specifically. I would say I mostly employ it to my general wealth allocation. So hyper aggressive is my crypto, and hyper conservative is like my stocks, fiat, bonds. I don't like have direct bonds, but I have bond exposure through ETFs, and like real estate. Like I'm not heavy in real estate, mostly like funds, REITs, but eventually real estate. So hyper aggressive would be crypto, and then this would be all that other stuff. So that's more of a general allocation. Maybe too conservative for some people, but I think in general, thinking of investing like this can be good because it just makes it easier to like implement a certain framework when you know what your boundaries are. When you don't know what your boundaries are, then you're kind of trading blind. At least if you have some rough boundaries, you're trading more informed. Now, there are many exceptions to this rule, and I don't actually really employ the barbell strategy for what it is, because I do have some stuff in the middle, like stocks. Maybe some people would say hyper aggressive, but I think stocks may be more in the middle. I think depending on how you view it. Some people would view hyper aggressive as stocks, but crypto clearly is much more hyper aggressive. So I don't think I like stick to this 100%, but I think some of my most successful investments have actually been following this. 𝗏𝗟𝗏𝗽 just said points of trades go into long-term hold. Yes, exactly. So what you could do is the money you make off hyper aggressive filters back into hyper conservative and makes this bigger, right? And then there's points where you take a plate off this side and you put a plate on this side, and then that plate will grow, and then you take another plate off and put it back on. So it's kind of like this funnel, right? Between hyper aggressive and hyper conservative. And that way you're always building up this side of things. Even if this side goes to shit, you always have like a lot of representation on this side. And then you're constantly funneling profits in, and then you can go more risk on during times of high risk. And times of high risk will mean like usually times of like what you would perceive as like a macro bottom, I guess. So for me, like I'm pretty hyper conservative right now. Like I'm pretty heavy in that category, but I maintain like a hyper aggressive exposure, and I probably go more aggressive during periods where the risk reward is higher to be hyper aggressive. Is that right now? No, it's not, frankly. Like in my opinion. Now your opinion may be different. You may think we're in a new bull run, and you may think now's the time to go real aggressive. For me, I'm more, let's stay relatively risk off, and maybe we go hyper aggressive later in the year. But this is just one interesting strategy. Crypto in Black did an interesting response. He said it makes sense. There's a misunderstanding about diversification. Buffett and Munger are often quoted for it. Yes, they diversified, but you know what they're known for? If they did extensive research and the company's excellent, they go in big. And this advice is so important. Back projects that you have conviction in with size. People make a real mistake in crypto and stocks, and it's diversifying themselves to death and not trusting their gut when they hit what they perceive to be a winning project. So let's say I think Phantom, using a random coin, Phantom is the next, like, I don't know, the next top 10 altcoin. It's like number 50 now. Let's say I think it's the next top 10 altcoin. I'm convinced it's the next top 10 altcoin. Like, I know it's the next top 10 altcoin. Let's just say. But I only allocate 1% towards it because I'm diversifying. Oh, I've got to stay diversified. Oh, I can't put too much in because I've got to diversify. Even though I know it's going to be the next big thing, I can only put 1% in. I can only put 2% in. That's a mistake. If you're convinced in an investment and you've done the fundamental research and you know it's going to be a winner, and this rarely happens, by the way. This happens maybe once every few months for me. So it's not like something that happens every day. I'm convinced this is a win. I'm convinced this is a win. No, like the stars really need to align. They aligned on Gains Network for me last year. That was the last time it's aligned like that. That was my signal to go heavier than maybe I would normally go with like a speculation project. And it's perfectly okay to say like, I like 𝗕𝗏𝗄𝗏 and I want to go 1% into 𝗕𝗏𝗄𝗏. But that's different from saying like, I know this is an amazing investment. I like and I know are very different. Like you rarely hit times where you're convinced. But when I'm convinced, I go big. And that's what Buffett did. That's what Munger did. That's what like the biggest investors, when they have an opportunity right in front of them and they have conviction in that opportunity, they go big. And yes, you can diversify. And yes, you can vary and diversify concentration from conservative to aggressive weightings. But when there's an opportunity on the table, you take it. And as Crimson said, conviction is hard to find. 100%. Conviction is really hard to find. And that is why when it comes, Crimson, when you have something that you find conviction in, I think that in itself is your gut telling you to size up on that weighting. But don't use that as an excuse to ape into crap, guys. That's not what I'm talking about. I'm talking about backing your gut and backing your research process and not treating every coin the same. Don't treat every coin as a 1%er when something's a 5%er. If something's a 5%er, treat it like a 5%er. Someone said thoughts on gold. Interesting, Jay. Because I actually held a lot of gold. Like a lot. Maybe 10 to 20% of my portfolio during the pandemic. Because I was like trying to hedge against like what I anticipated as being money printing. But the funny thing is risk assets ended up performing better in a low interest but high inflation environment, which makes sense. So the real hedge then was actually like commodities and risk assets. But gold is the much better performer in amongst volatility. And interestingly enough, 𝗟𝗲𝗿𝗍𝗍 actually said because he expects volatility, that gold is his preferred asset of 2023. Which is interesting. Colgate. No blah, 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 number go up and down. That's the point of this number go up. I'm not here to make predictions. Of course, I'll give them to you because I'm a degen and it's fun to make predictions, but I'm not going to like claim my predictions are 100% accurate. My job is to, well, research fundamentals and share my knowledge with you guys. But yeah, in terms of gold, Gareth said it would be the top performing asset of the year because of the risks being posed by the macro. And he views it as a good hedge. And I would agree with him. This year could be a strong performer. But to invest heavy in gold, why are you doing it? Well, typically you invest heavily in gold to protect capital. So protecting capital means you need to have capital. So for the majority of you, and I can't claim to know your net worths, but considering you're in crypto and considering most of you are degens, I'm not sure you're in capital preservation mode. I'm personally not in that mode until I have, like, I don't know, a lot more money than I have now. And obviously everything's relative because a lot of money to some person is, to some people it's 10K, to some it's $1 million, to some it's 10 million, to some it's 100 million, to some it's $1 billion. But for me, maybe I would protect myself in gold when I'm 40, 50, maybe even 30, but like on a serious stack of cash, and I want to protect and hedge against, you know, potential downside in risk assets and obviously inflation. But because gold is hard to make money on, it really is a capital preservation play. So if you guys are sitting with big net worths, then of course gold can be a really good play for you guys in 2023. But most of you probably aren't. So I don't know. Like I probably would. Miles 𝗟𝗍𝗍𝗍, Colgate, the best toothpaste brand in the world. I don't know if that's true. I use it though. Degens are listing Miles. Yeah, we'll get into altcoin stuff. Technically, these Sunday shows are altcoin research shows. I think I've just been like very drained by Twitter recently, just reading through. So I felt like at least making this first hour more general because it's just very draining dealing with such fickle mindsets, very short-term mindsets. Where does your capital come? Someone said it's personal. I can explain a little bit more. Damn boy. I mean, I'm not going to go into my parents. I don't think like I'm necessarily, well, I'm at liberty to say, but I don't think it's necessarily the point. A lot of my capital was from some very, actually a lot of my capital was from an Apple trade I made in 2019, which Forexed, which was like terrific. And then like I built up a nice stock portfolio off the back of that. Obviously, you know, hit some crazy 10, 20Xs in the stock market. Did a lot of investing in crypto, probably more towards the 2020 side of things, but I did have Bitcoin and ETH exposure from I think even though I was like aware of the space in 2017, 18, I didn't think I actually bought with size until 2019, like actual size. So when I bought with decent size, obviously by 2020, 2021, post-pandemic, especially 2021, those buys were, I mean, I was rewarded massively. I got entries of Bitcoin at $5,000 and it went to 60. And I got entries at ETH at $1,000 and it went to 5,000, which is a 50x. And I didn't hold all the way, of course, because I diversified into alts. So I sold some ETH at 1,000 and I put it into alts. And I traded alts, and some of them 30, 40x. Some of them 50x, like my Luna, which I held a lot. Like, although technically I broke even on Luna because I sold enough to break even. Like a lot of the profits went to nothing because I held a lot still. So that was a bit of a fuck up. But basically, like how I got capital was a mix of stock trading, crypto trading, then some decent rotations, which resulted in some pretty big gains. It could have been a lot more if I'd like maybe been a bit more diligent in my profit taking. Like a lot of you, I think when the top was in, maybe I was in denial until, don't know if denial is the word actually, but maybe a bit more too optimistic when that first dip started happening. It's very easy to call the top in hindsight, but at the time you guys would remember that the narrative around the top was when we first got those dips, it was no, buy this dip because this is macro FUD. It's macro FUD. You know, the Fed won't. No, the Fed has to print money. They have to print us out of this hole. Like, no, they can't hike. They can't hike rates for long. It'll be like, and then like the rate hike anticipations kept pushing out in terms of their timeline. So then obviously the market dropped and dropped and dropped. And then we had Luna, which was like a black swan, and then FTX black swan, and then just multiple like capitulations, which just made things 10 times worse. But obviously all of you guys know what happened then. But yeah, in terms, just like summarize what I was saying, yeah, I got my money a variety of ways, and also like I wasn't growing up in poverty or anything. I went to good schools, had a good childhood, good family. Like I'm not there's no rags to riches tale here like Sheldon. Sheldon obviously went from like nothing to a lot of money. That's awesome. But I'll never be fake, and I'll always be like honest. Like I was like, yeah, was and am very privileged. Coming from Melbourne and having a good background. But I feel like the game isn't won there. You have to. I mean, especially if you want to reach higher heights, you have to keep playing the game, and that's what I've been doing, and continuously striving for more and more and more. And yeah, I'm just like really hungry. So that's why I keep in the game. And crypto is what I think long term the best game to be in. Because like I'm so bullish on this space long term. Like guys, like I'm so bullish long term it hurts because I actually because I've started working with a lot of projects, a lot of I've had a lot of great chats with like VCs and I'm pretty like infatuated, but also like immersed in the industry. I've have a totally new perspective on crypto. Like when I first joined crypto, it was for the money. Like I'm not gonna lie, I bought Bitcoin in 2019 because I thought it was low and it could go up. Like it was just a dumb trade. And then I got even more into crypto in 2020 and 2021 because I thought it could go higher. Like it wasn't like, oh, I love Bitcoin. It was more just like, oh, I'll make money off Bitcoin. But as I've actually stayed in this industry and learnt more, I've realized just how groundbreaking this technology is. And some of the use cases are ridiculous. Like in terms of their upside, they're ridiculous. And in terms of their net effects on efficiency in traditional markets, they're ridiculous. And that's like so exciting for me. And that's why I'm so bullish long term. Especially like post ETH merge. Long term. I'm talking like 10 years. So we're in the right place. It's just navigating the short term crazy whirlpool of changing macro and altcoin narratives and stuff. It's a lot. And if you're going to play that short-term game, you have to be prepared for volatility. But long-term, like we're in the right direction. So generally, crypto is a game of surviving. Don't wreck yourself, and eventually you'll come out on top. Surviving comes first, making money comes later. So don't make money at the expense of surviving. So don't pursue making money at the expense of surviving. Survive first and make money later, because just by surviving in 10 years, you're basically going to make it. But trying to make too much money now, Making money now is good because it compounds into money later. Don't get me wrong. I love making money now. It's why I trade. It's why I do altcoin narratives and stuff. But don't trade at the expense of money later. Shouldn't it come from nothing? Those times are what made him who he is today. Yeah, I guess. Yeah, for sure. Absolutely. I'm just saying nothing like in a financial sense, right? Yeah. I think adversity creates, in many cases, like makes you into a better person and a better trader. I mean, I've had my own adversities. We all have, but some are just different. Some people have financial adversities, you know. Some people have mental adversities. Some people have physical adversities. Like everyone's challenges are different. And I think oftentimes your perception of life actually like it scales, especially if we're talking in terms of monetary like expectation. It scales. Like when I first made $5,000 a month in crypto, I thought I was a king. Then I kind of got used to that feeling. And then, you know, when I made 10K, I thought I was a king. I kind of got used to it. You know, when I made 20K, I thought I was a king. When I made 50, I thought I was, and then I made 100. And it's just like, goes up and up and up, your expectations, and you kind of get used to things. So I think those that are born in like less advantaged situations, that's your baseline. So your baseline is your normal, and your expectation, since it is your normal, that becomes like your baseline for happiness. And someone super rich living in a palace, like some prince, his baseline for happiness may be like $1 billion, but like he's no happier than the person with 1,000 because he has $1 billion. Because that's his baseline, that's his normal. So anything more than that will feel great, just like anything more than the person with nothing will feel great. And anything less than that will feel shit, just like the person with nothing, anything less than that will feel shit. So it's like, I've honestly just found it scales. That's kind of like why money means nothing. In many ways, like it doesn't really, but you know, in many ways it does as well. Like it does, money is a stress reliever, for sure. But it doesn't mean anything in terms of happiness, but it does mean a lot in terms of security. And I think especially for others as well, if you have codependents like family, then I think money matters. But for me, yeah, I guess I'm at the stage where like that's not really a factor. It's more just like my general like ambition and striving to like achieve stuff that keeps me in the game. Check out Sheldon's The Chosen Ones. Yeah, it's good. I really enjoyed it. Yeah, I agree. His story is inspirational for sure, because it shows that people can do it from nothing, and it's harder to do it from nothing. For sure, it's much harder. TA, yeah, we're gonna get into some TA. On the topic of TA, what's my next topic? It's Coinbase. This is gonna be a big one because it impacts ETH. Before we get into that, I want to give a shout out to one of the show sponsors, OKX. They have a mystery box campaign running at the moment, which means if you sign up for a new OKX account using the link in the description, you can get access to a $10,000 mystery box if you deposit $50. What does this mean? No, you're not getting 10,000, or you might, but it's like a chance box, right? So you could get $5, $10, nothing, $50, $1,000, $10,000. So you can get like anything between nothing and 10,000, but obviously, if you want to try your luck, then there is a link in the description. As I said, sign up, deposit $50. Don't even need to trade, although it's a fantastic exchange to trade on. Like honestly, it's amazing. You don't need to trade to get the mystery box, but it is quite generally good as an exchange. I'd say it's up there with Bitget and ByBit in terms of UI for sure. Maybe even second for UI or a close. I don't know. It's pretty up there, but you guys would know if you are. If you use it. So link in the description to that. Only 16 likes? No, there's way more than 16 likes, bro. There's let me see on my screen how many likes there are. There are 347 likes. So make sure you smash the like button if you haven't already to get those likes up to, I think we can get to 1,000. But I think we can get to 1,000. Absolutely. So smash that button. Should I like from my own account? Nah. I always feel like it's bad luck to do that. I don't know why. It's just like, I don't know. I never like from my own account. It's like a weird OCD thing I have. Smash like to 1K. I reckon we can do it, Khalid. Maybe not right now, but maybe by the end of the stream. Alex said he smashed the like button. Will Smith that button. So, I think, well, honestly, the biggest news of last week was Coinbase. So we got to talk about it. Like, we've talked a lot about macro and stuff, but let's be real here. The biggest news of last week was Coinbase. Now, I did a video on this. It's huge Coinbase announcements bullish for these altcoins. That explained it in more depth. So go watch that if you haven't already. But let me give you the TLDR now, because that's a 57-minute video. For the ones with only a few minutes, which you probably have more than that because you're watching the stream, but for those only with a few minutes, let me explain the TLDR very quickly on that. All right. Coinbase is launching an L2 named Base, built on Optimism. So they're using the Optimism, essentially the Optimism SDK, to spin up an L2. So the Coinbase L2 is going to be Coinbase's proprietary it's a tongue twister. Proprietary chain for interaction with DeFi, and it will act as an on-ramp, off-ramp. But they don't have a token, right? The base token, since it's an L2 and a layer 2 to the Ethereum network, of course, ETH will be the gas token. ETH will be the token that is used on ultrasound money. ETH will be the gas token that's used whenever there's a transaction that takes place on the Coinbase network. So, at first, in the initial few weeks, in the initial few months of the launch, it'll be bullish for ETH. Due to the fact ETH will be the gas token and the main ecosystem token needed for like LPs, swaps, etc. So the first thing I think it'll do is be bullish for ETH. And we've seen with ETH, it's already ridiculously deflationary. I can't imagine what this will do in the bull run. Like, I actually can't even comprehend it because it's so ridiculous. Like, it's absolutely ridiculous. Someone said, can you have your email? You can DM me on Twitter if you want to send me something. I don't really check email. I'm more of a Twitter lad. But yeah, the burn's absolutely ridiculous already. So just imagine like this kicks into like a full bull run. I can't even imagine the amount of deflation on the Ethereum network. So in terms of ETH, I'm super bullish long-term at Hertz, but as a short-term catalyst, the base network can be very good. I mean, we already saw a crazy amount of burn after the Blur airdrop farming, which is still happening. So the Blur airdrop farming already had an effect. Like, Coinbase has 110 million users. Their plans to onboard 1 billion. They have 110 million. That's a lot of new users being exposed to DeFi. So that's not only bullish for ETH, that's bullish for DeFi, because that's EVM compatible on Optimism. So think about it this way. You're a user on Coinbase, 110 million. You now start using the Coinbase L2. That L2 is EVM compatible. You now bridge from the L2 to other L2s, and that's a net positive inflow for the entire DeFi ecosystem. So it basically has the chance to expose 100 million new customers to DeFi. And long-term, probably like 1 billion. Coinbase, being one of the most regulated, biggest exchanges in the US, has the footing to onboard a lot of retail. And those retail, using the Coinbase L2, a lot of them are going to funnel into DeFi. So at first, you're asking for my email again. I just told you, DM me on Twitter, bro. At first, I think it's bullish for ETH. But very soon after, I think it becomes most bully. I think it becomes most bullish for the ecosystem. Early dApps that deploy on this Coinbase L2, in my opinion, are going to perform very similarly to how the early dApps on Arbitrum performed. Now, the early dApps on Arbitrum were ridiculous in terms of their performance, not only in TVL terms, but in dollar terms. Why were they ridiculous? Because people couldn't bet on Arbitrum via buying the Arbitrum token because there is no token. There still isn't a token. So the only way to get exposure to Arbitrum was to buy the ecosystem. Just like when this Coinbase L2 launches, the only way to get exposure, yes, is to buy Coinbase, the stock. But crypto guys don't like buying stocks. It'll be through the dApps. So I view the early dApps, and we're going to need to keep our eye out for when it launches and when these dApps start to deploy. I think the early dApps are going to be strong performers. And I also think, although it's bullish for ETH short term, long term, they're going to have their own token. And they're going to move away from ETH into Base. Now, obviously, someone just mentioned the SEC. I agree. SEC scrutiny, especially for a Coinbase token, will be huge. So what I think is long term, they will find a way to pivot into their own token. And this will divert a lot of attention to airdrop farming that new token. I own CoinStock via a shares app still underwater. I hate how I can't, since I'm in Australia and freaking Coinbase is the security, I don't know how much I can really say about it in terms of my outlook. But yeah, I don't know. I don't even think I need to say anything about my outlook on Coinbase. You guys probably know. Can we get the likes to 1K? Let's do it. Let's smash the likes. Let's see if we can get it to 1K. But I think a lot of airdrop farmers are going to now begin to get a lot more interested in this ecosystem. And what that's going to mean is a lot of fake, and maybe it's not technically fake, but at least a lot of increased interest in the Coinbase dApps, or the base dApps, because it's an L2. So that injection of TVL will be very good for the base dApps. So I view this as a three-pronged play. Initially, it's bullish for ETH and general DeFi. Next, it's bullish for the dApps. And third, it's bullish for the Coinbase token, but that'll feed back into the dApps. And when I say Coinbase token, I'm not referencing the stock. I'm referencing the base L2. So I'm not talking about the Coinbase stock. It's different. So this is kind of my initial thoughts on the Coinbase L2. Let's talk about this more in a month or two as we approach launch. Things get closer. But that's kind of my opinion. Now, I want to talk next about a couple things, Solana being the first one. But I'm just going to check my feed to see if there's anything that came up in the last... What the hell? Does Twitter listen to me or something? It's really weird. Is Twitter listening to me? Because literally the third thing on my feed was a Coinbase thread on how to maximize your profit from Coinbase. Technology's scary, man. Very smart speculation on base. Appreciate your insight. I don't know. That's weird. But anyway. I think social medias listen. They have to listen. They have to listen because it's ridiculous that, like, I don't know, this happens all the time. Like when you're talking to a friend about something, oh, I feel like an ice cream. And then like an ad for like a McFlurry comes up on your phone. It's like, anyway. And I have my mic connected so my computer can hear me. So anyway, Gideon did a thread. Let's just see what he said. I don't know if it's a good thread or not, but let's just see off the back of what I was saying. Last we've seen a boom in L2s. Coinbase launched so they could have launched an L1, they launched an L2. Crypto markets oversaturated with L1s. Legally, it's easier to build on an L2. They don't want their token to be a security. They chose to launch an L2 because they want to position themselves with the devs were. Yeah, it makes sense why they positioned themselves on Optimism for sure. Future of DeFi is Ethereum. They chose to build on top of ETH. Why? Transaction fees are paid in ETH. The same for Optimism and Arbitrum. Then it hit me. This is bullish for ETH. Crypto, Gideon, your first takeaway was my first takeaway. That's what I said. This is bullish for ETH. Yes. And I love how his thread's like following my if my other two bullish, yeah. Let's see if his thought process matches with mine. Why not a new token? Same with Arbitrum, they don't need it. Why is L2 not an existing L1? Centralized exchanges losing dexes to DeFi, blah, blah. Oh, no, he didn't. He just ended at ETH. Okay, fair enough. It's a good thread, but he just said the ETH thing. He didn't go too much into the eco thing. I thought maybe he was going to like continue on my thought process of every stream I watch, you're always talking about McDonald's. I actually had McDonald's earlier today, and I hate McDonald's. I don't even like McDonald's. I love good food. Like, I don't know if I'd call myself a foodie, but like I appreciate quality food, especially like a quality Italian, and I'm a big fan. But for some reason, I've just been eating McDonald's recently too much. And actually today it was because we were driving home from the country, and the only thing obviously is McDonald's because it's the only thing on the way. I don't even like McDonald's. So no, it's not an advert because I don't even like it. I had the worst burger. I had like a quarter and then I chucked it out, and I had a few nuggets. That's it. And I'm starving because that's all I had. Yeah, it's terrible. I agree. Poison. Yeah, I usually eat much healthy. Like I usually eat pretty healthy. But to be fair, it is a weekend, and all of these Sunday streams are on a weekend. Crimson said Macca's is a time saver. It is a time saver, but like if it's possible to get something slightly better for a similar amount of time, I'd rather wait another few minutes. What's the best local Aussie restaurant? Oh god, that's an impossible question to answer because local will depend on your suburb. And like, I don't really want to dox my suburb. I'm okay to tell you guys I live in Melbourne. I'm sure you could work it out if you really want, but I don't know if I want to like announce it on stream. So I don't know what the best local is, to be honest with you. It's like suburb dependent, bro. I don't know. There are lots of good restaurants. My favorite restaurant in Melbourne is Gimlet. I'll show you it. And then obviously we'll get into Solana. This is my favorite restaurant in Melbourne. If you guys are from Melbourne, you'll know this restaurant. It's great. It's just great, like French inspired cuisine. I think it has a Michelin star. Maybe not, actually. Nice outfit. It's actually in the world's best 50 restaurants, apparently. So yeah, that's my favorite Melbourne restaurant, I think. What else do I like a few others though. Melbourne has the best food in Oz. Not even a question. 100% the best food in Australia. Actually, the best food in the Southern Hemisphere. And one of the best cities for food in the world. Absolutely. Chin Chin, I've never been, but I've heard it's good. That's on the same. It's like 600 meters from Gimlet. It's on Flinders Lane. Yeah, Melbourne food is really, really, really good. Because you got everything. If you want Italian, you can eat Italian. You want Greek, you can have Greek. You want Chinese, you can have Chinese. You want Japanese, but it's all like high quality. So it's not like if you go to like Italy and you have Japanese, you know it's gonna be like dodgy. Like I've got food poisoning there before. Whereas like here, it's like any cuisine, you know it's gonna be at least solid because we have so many immigrants. But obviously we don't excel in one thing. So we're not experts at like Greek food or experts at Italian food. We have Italians which are good and they make it, but we're not like consistently good across the whole city. So you do need to pick out the restaurants, but generally very good. All right, let's talk about Solana now. Enough food talk because I'm getting freaking starving talking about food, and it's 2 a.m. It's 1 a.m. I always do these streams late, and they always result in me getting ridiculously hungry. Because usually I go to bed at like 11. So like by 1, I'm getting hungry from dinner. Melbourne's second largest Greek city. Interesting, outside of Greece. All right, where's my Solana tab? Give me my Solana tab. Because I had... Okay, here. Okay, what happened with Solana? Fucking Solana. Solana annoys me, man, because the tech is... How do I even word this? The developer ecosystem is amazing. One of the strongest dev pools in crypto. The chain's output is amazing. One of the best practical results in crypto in terms of like what it can achieve when it's working. The speed, the ease of use, it's great. But then it just breaks. And they restart the chain, and it just shows you it's so freaking centralized. So there's obviously a massive trade-off there. The trade-off is, let's give up a little bit of centralization for speed. And although long-term, I think Solana's going to fix this, don't even know how to say that name, Marcus says it's trash. I agree right now the product is trash because, I mean, blockchains need to be, like, they can't just be shut down and restarted. I agree it's trash, but long-term, I don't think it's trash at all. At all. At all. Because I view it as growing pains. Now, these growing pains could end up like being their Achilles heel, for sure. But they do have a very interesting approach, which is, let's go to market. Let's crash and bash. Let's fuck up. Let's put our chain down. Let's turn it back on. Let's see what works. Let's break shit. Let's see what doesn't work. And then by the end of all those trials and tribulations, we're going to have a very efficient, battle-tested working product. That's the approach they're taking versus Cardano, which is taking the opposite approach, which is, let's sit back. Let's observe other L1s. Let's build in the background. Let's make sure everything's right. Let's get it perfect. Let's not launch anything unless it's been tested a million times. And both are valid, I feel. The Solana guys, the main complaints about Solana is it's too centralized, it goes down, it's broken. And then the main complaints about Cardano is it's too slow, they don't ship, there's nothing on Cardano. So they're just trade-offs. Now, what happened on the weekend with Solana didn't change my long-term opinion on Solana. It didn't make me bearish on Solana. It didn't make me bullish on Solana. It didn't do anything to my long-term opinion of Solana, which is it is going to potentially be a non-EVM winner. We know the future will be EVM dominated, but there will be non-EVM winners. And if I have to bet on non-EVM winners, I'm betting on a bit on NEAR, and I'm betting on a bit of Solana, and maybe I'll bet on a bit on Move. But Solana's one of them, because you can't deny the dev ecosystem. You just can't. You go to any one of those conferences, you'll be blown away. I was blown away in Lisbon. You see some of the dApps building. It's amazing. The Alameda influence, not great. But now they're gone. Hopefully they recover from that. So for me, this stuff doesn't impact my thesis, but it does just remind me of the fact that it is a long way from being perfect, just like every blockchain's a long way from being perfect. Solana especially is. So let's look at price action. What's the short-term prediction on render? Okay, we'll do render next as well. Sol first, then render. So what's interesting about Sol is it's still in this range, right? Look, it's been ranging out. Nothing's really changed, to be completely honest, in terms of price. The only thing that may change things, let's look at the upside scenario first. And I wish my charts looked better on mobile, but my screen's just so big. the scenario for Solana to the upside is a break of, maybe you'll see it better on the daily. A break of this diagonal in confluence with a break of this major horizontal and the 200 MA, which is now above us. So you've got these three really key resistances Sol needs to flip. Now, what happened on the daily before was it flipped all of it, and at one point was above, but then got rejected in that very next daily candle. So unfortunately for Sol, that rejection means it came down to test mid-range before it has another attempt at breaking to the upside. But the only real chance Sol has of breaking the upside is Bitcoin doing something like this. And even then, Solana's been a laggard. So is it suddenly going to switch into something with relative strength off the back of a huge restart? Probably not. But let's keep our eye on the TA, because it does have a $30 to $40 price target if it breaks. What about downside? Because I said I'd talk about the bear scenario. Downside's pretty obvious. $21. Why is my thing so weird? It's like not smooth. It's like all like, see how it's like jumping around? I don't know why that's doing it. But yeah, downside, rejection of 21 and 17 as well. And I don't know why my drawing tools are weird. So yeah, so you've got that key low at $8. I don't think it's getting there, but then you've still got like a decent level that it needs to hold at 17. So if it starts breaking down of 21, I think it's definitely going to 17, and then probably like 12 to 16s on the cards. But if I zoom out a little bit, you'll see why 17 is so important. Let me just highlight it for you. It's the previous high of the bull run. So it's that first level that it broke out of. You see this was a range? This was its previous range before it broke out. That's why it's such a key level, 17. So for me, if Sol breaks down 21, it goes to 17. It tests this key level. If it drops that key level, sayonara Solana, price-wise. I'm not saying network-wise. But if, it's still bullish structure. Okay? It's okay. Push up. Consolidation. Not really a flag, but, arguably a flag. And hopefully a bullish breakout. Probably like a 60% chance now. You get the upside break. 40% chance we come down. And look for those levels. Your drawing tools are weird. Yeah, I don't know what it is. They're playing up. They're playing up. There's some setting that's changed. It's like super like... Yeah, super like weird. Like I must have changed the setting. So someone asked for render. Now look, I'm no TA expert, but I do my best because it's fun. At least in the shorter term. We talked about earlier. This looks like the McDonald's logo. Why does everything always end up being about McDonald's on these streams? Looks like the McDonald's logo. Okay, well I can just chart render for you right now. There you go. There you go. Oh dear. Well, all right. Yeah, you guys know what I told you about the long-term stuff earlier. Obviously, all this is like shorter-term stuff now. It's the fun stuff. It's the fun stuff you do with less of your portfolio. That kind of keeps me entertained. All right. So you've got this key level that M looks so bad. Yeah, it does look bad. So it looks like a double top. I'm not even gonna lie to you. It looks very double toppy. But you know what? This is a pretty key zone. So for render, you really do want to bounce at this 127 to 137 region. You want to bounce in this zone. If you don't, it's probably gonna break. And then you've got like a 96 cent target. It's 96 cents to $1. But yeah, it's not looking good at all. Not looking good at all. But you can maybe like take, if you are taking a long, so if you think Bitcoin is going to do this and you want to take a long, take the long, maybe slightly lower, maybe like 136. Take the long with your stop at 125. So I don't know what leverage you guys use, but like that's where I would take my stop, 125. Because at least then, if we break, it's okay. Bearish retest, and then down to $1. But obviously that level is, and I deleted it, but I'll write it again. That level's like $1.33. So yeah, you want to set open like 135, stop 125. That's how I'd play it. If you're like desperate for a long, of course you can always just flip short. That chart looks yucky. Yeah, it does. But like, you know, you can always bounce. You can always like range. You can always do like that. It's like, it'd be a very big range. Or likely we, you know, I think maybe we get a break. You're not McLovin it. Are you really not McLovin it? Show us some NEAR. All right, let's do NEAR. Oh, this looks shit. A lot of these alts look bad, man. I'm not gonna lie to you. Bearish retest. So either we get rejected here. I mean, we could get rejected here unless the bulls break and then there's a really clean retest, right? I wouldn't long on the break. Because what can happen is you can just get like wicked straight back down. So what I would do, and this is obviously short-term trading, this isn't like long-term, is, I mean, you could scalp short, but this is not a great short, but you can scalp short. Once I said before, I don't like shorting the market. So everything's in confluence with Bitcoin right now. If you think Bitcoin's going to get rejected here at this level, which it is right now, and go back down, then obviously, like if you short alts, you're going to make a higher percentage trade. For example, NEAR, if it gets rejected now, goes down 9.3%. Bitcoin gets rejected. Its next support is at like 1.7 and even lower, like 4%. So like even if Bitcoin freaking tanks 4%, NEAR's basically going to go down 9-10%. So if you short alts. Why do you short alts? Short alts, long BTC. Because BTC dominance is going up. So right now, you short alts, long BTC. That's actually the play. So when you're shorting, you short alts. When you long BTC. That's really the play. For now. In the short term. Yeah. You can also long alts, but they have to have relative strength. They need to be very strong narratives. People asking me to check projects. We're going to check all these soon. Phantom. Everyone wants different stuff. We'll get into everything. We'll get into, you know, a few things. So NEAR, Yeah, you need a flip. You need a flip. You really need a flip, or this is going to be a bad retest. Bearish retest. I shouldn't say the word bad because, we automatically think price is going down is bad. It obviously is if you're net long, and I'm net long. I'm sure most of you are net long, but there's no bad in this market. There's just the reality of things, basically. All right, let's go. Let's do some common ones. Someone wants OP. That's a cool thread. I want to look at that. I don't want bearish. Let's get rid of this. Go, Joe. He had a good trade. So basically, with Optimism, just lining things up. With Optimism, what am I doing? Just want to get rid of all my stuff so I can show you. 2.874 is the next support. You've got mid-range, top of the range, short-term range. Next drop is huge to $2. So you don't want to lose 2.84. So Optimism doesn't look bad because you have the lows, then you have the higher low, then you have the higher low. So the general direction's solid. But this is very key. So if Bitcoin reverses, gets rejected, then that's bad for OP. Very bad. But it is actually above support. So then you have the next target at 320. So for me, no trade zone. Really. Hard to trade. OP goes back to 2. It's stacking that. I'm stacking that bag. Crimson. Be very careful about OP's dilution. There's a lot of tokens yet to hit the market which haven't hit the market. So just be very careful about OP's dilution. Long term, I'm actually not that interested in Optimism. I'm much more interested in short term, to be honest. I think long term this thing fucking nukes. Long term though, long term, short term, it can perform strongly. Absolutely. But there's no historical. When there's no historical data on a chart, you can't trade it effectively. You can't trade it effectively. It's almost a parabola. Basically a parabola. If I don't know whether my parabola tool is, I can't be bothered getting it up. But if you're watching 𝗕𝗬𝗕𝗃𝗃 or something, they would draw it like this. They'd have a parabola. And then they'd be OP breaking key level. And that would be the break. But that charting that's so dumb. And I see not MM necessarily. MM's a bit better, but the Moon Carl do this a lot. And do parabola based trend lines. It's just nuts. It's full TA astrology. No parabolas. What's wrong with OP? I'll show you. All right. It's the 27th of February 23. Basically, exactly. This is the 28th, right? That's where we are. Only 27% of supply is in the market. In June, there is a ridiculously big unlock. For the investors, so like seed investors, they're going to dump. If you don't think they're going to dump after buying it 2 cents, you're wrong. And then also, what the hell does RPGF stand for? Retroactive Public Goods Funding. I've never heard it I've never heard it be called RGPF. Okay. Anyway, is that like a ecosystem funds? Most people call it ecosystem funds. They're calling it RPGF. But anyway, semantics aside, major unlock. Supply schedule is very rapid in this range. Same degree of dilution as currently, but post a major unlock. Then things start to taper in May. They become a lot more linear, but still significant, especially from investors. Oh no, that's the ecosystem fund. But like the ecosystem fund, like whatever, I don't care about that. I don't really care about airdrop either. Airdrop's great. Airdrop like incentivizes people to use the network. Kind of what I would consider to be a net positive because it cancels things out. But this investors section, this green thing, yeah, that's the scary one because green is mean in this case. Green means a whole lot of people that bought cheap are going to want to take profits. So look, I wouldn't be worried if we were here at 75% right now. Even at 50%, I wouldn't be worried. I'm just worried because we're at 25%, 27%. That's pretty early on in the supply schedule. So like short term, it doesn't mean anything, guys. If you think supply schedules mean a damn short term, you're wrong. It means nothing. This thing could go to $4 short term. It means nothing. Long term, however, and I don't know what your time horizon is, Crimson. Long term, if you want to hold Optimism, if you want to put it in your 2-year portfolio, and if you do, it's your prerogative. But if you want to put it in, you are facing 2 years of extreme dilution. Will the impacts of the airdrop and the network growth and the amount airdrops are currently being priced in mean that the token is higher than it is today? Possibly. But would I actively bet on it given the headwinds? Probably not. Unfortunately, Khalid, everyone has your mentality. And because everyone sells before the unlock, it'll probably pump after the unlock. You'll see a pre-unlock sell-off, bro. You'll see it. You'll see it. The weeks into the... people will panic. So if you're going to sell... if you're planning on selling, consider doing it sooner or... I don't know what's your time horizon? It all depends on your time horizon. Doubling the supply would halve the price if there's no change in demand. Yes, stuff. Economics 101. But I guess you have to factor in if there is a change in demand based on the airdrops. Probably. Network adoption. Probably. Optimism's hot. Coinbase L2. Enough demand side pressure to kind of counteract some supply side stuff. But probably not enough to, not enough to halve the price, but enough to like keep at bay any potential gains. Okay. I want to go over some alpha on the next altcoins that could be strong performers based on the interview I did with Jose. Because some of the points here are huge and I want to break it down. I haven't had a chance to break it down on camera, and I think it's freaking alpha pack. And it did change my perspective on a lot of different alts. Of course, if you want to trade any of these alts on a DEX, so not leverage trading, but swap, trade, all that sort of stuff, you can do so on KyberSwap. It's a DEX aggregator, which means basically it's going to find the best trade route for you. So I'm on the Optimism network right now. Let's say I want to swap from 𝗬𝗲𝗍 into Balancer, so 2 DeFi protocols. It's going to put my money through Uniswap v3 into wrapped ETH, and then it's going to swap that into Balancer to get my final amount. That's going to end up saving me money because it's automatically routing through the best route possible across all the DeFi protocols. Let's say I want to go from 𝗬𝗲𝗍 into Chainlink. It's going to do the same thing. Uniswap v3. Let's see if we can get it through some different route. USDC. Yeah. So on USDC Link, it worked out that it's actually cheaper to go through my on KyberSwap's liquidity pools into DAI on Uniswap into Link. So basically, we'll route to save you money. Now, in this case, it saved us 0.12%. So basically, instead of using Uniswap yourself, if you use KyberSwap, it'll aggregate. It's honestly such a freaking good user experience. Very happy we partner with them. So link in the description if you want to DEX trade. And also, if you're trading on DEXs and you're using your MetaMask and you're doing all this DeFi stuff, make sure you're protected. The way I would do that's through a VPN. Sure, most of you have a VPN, but if you don't, like, what are you doing? You need a VPN. We actually have a deal at the moment where if you buy a NordVPN, you can win extra subscription time and you have a 30-day money-back guarantee. So if you don't like, if you get a NordVPN and you don't actually like it and you realize it's a waste of money, which you won't, but if you do, you can just get your money back. So it's like no risk, basically, if you sign up. It's $3 a month. I mean, yeah. $3 a month to protect your identity online is like a no-brainer, in my opinion. I mean, $3 a month. By the way, there's a 60% discount right now, which is crazy. But $3 a month to save thousands of dollars trading on a DEX is great risk reward. We talk about risk reward. That's pretty damn good. So yeah, link in the description to NordVPN as well. If you want to get yourself a VPN, once again, highly recommend. And not just for the fact you can watch American Netflix from any country, which is also a big bonus, or Australian Netflix from America. Let's get into the Jose notes because these were alpha packed. So, bit of context. Basically, and I'll try and get up the channel, Crypto Banter. Basically, if you go into my show, last week I interviewed, or the week before, I interviewed Jose. Jose is a founding partner of Delphi Ventures, which is Delphi Digital, which is the research firm's venture fund. So he is pretty much one of the top guys at Delphi. And they run a mid-9-figure portfolio. No one's watched Australian Netflix from America? You're 100% right. No one's ever done that. Actually, there are some cases where a show will get delisted off American Netflix, and you'll need to go to another country. But you're right. Most of the time, it's the opposite. I meant to say Australia to America, or Japan to America, or Europe to America. Maybe America to Europe. But yeah, you're pretty much right. Yeah, I don't know. It's funny that he's showing up on my feed. It's funny because I'm logged into the Crypto Banter YouTube channel right now. Not even logged into my personal one, and there's still more more dates there. But basically, yeah, Jose's the Giga Chad of Delphi. And if you haven't watched the interview, I know it's long, but you can watch it on 2-speed. It's like the biggest life hack ever when it comes to YouTube. And you can get that knowledge in an hour. But if you want it quicker, if you want it right now, then I can give you the top points right now, courtesy of Delphi Intern, who basically dissected the entire conversation into a 4-page note or a 4-thread note. So it's like actually more than, it's like 10 pages, but yeah. So let's just go through it real quick. I'll go through my major findings. Ram was so confused with the Aussie accent interview with Jose. What did he say? I didn't watch. What did he say, Khalid? Let me know what he said. Did he react to the interview? Aussie accent interview. I don't understand why he would be. Yeah, I don't get it, but let me know, Khalid, what you mean. So yeah, let me know in the comments if you can elaborate more on that. But basically, Jose went through his background. It's like he was big into poker, one of the strongest poker players. But he's not. Jose's not Aussie. His accent's not Aussie. It's like more American. Oh, it was another interview. Makes sense. Makes sense. Yeah, I don't. Rand's Aussie interview needed subtitles. Michael Kong. Thanks, Aussie. I think it's Michael Kong. Yeah. My accents. Oh, okay, that's funny. I'll need to watch it. But yeah, basically, yeah. Jose is more like American. I guess Jose's accent's like American and British. He's yeah. It sounds like American and British. He's in Portugal, but yeah, my accent's not very strong at all. So obviously, he was into poker. Really got into like thinking about bets and EV from that. Was an analyst during the ICO phase. A few of the main lessons he learned was verify, don't trust. What does verify, don't trust mean? It means don't just trust a founder blindly based on their accolades or the fact that they went to MIT. You have to look a bit deeper. The failures of last year are unique, but they mostly all centered around charismatic founders. Survival in crypto is most important. It's also what I said at the start of the show. I think survival is ridiculously important. Someone said it's shots fired over the South. The South African accent is the worst accent. I'm sorry. I need to watch the clip. I'm sorry, Josh, as well. The South African, and I'll say this again, and I'll stick by my saying from last week. The South African accent is the worst sounding English spoken accent in the world. Native English spoken. So that doesn't mean like someone from Lisbon speaking English, because they're not speaking English. They're Portuguese. They speak like it's not native. The South African accent is the least visually. Fuck, I can't even speak. The least auditorily palatable English variant that's native. It is. I'm sorry. And everyone will agree with me as well. Everyone in the comments, do you agree? Yes or no? I did this last week, but yes or no? And everyone will say yes. Nah, some people say no. Oh, New Zealand's pretty shocking as well. New Zealand's shocking. New Zealand. Oh, New Zealand's okay, actually. I don't know. It's okay. Scottish. Wrong. Indian's not native English. Southern American's pretty bad as well. You're right. Actually, Scottish is pretty bad. Actually, I take it back. Some of the English accents are miserable, like from like up north. Anyway, let's just like rain check that. It's who even gives a shit. Let's talk about crypto because like yeah. Now everyone's just shitting on everyone. Some people are saying English is terrible. People are shitting on Kiwis. Everyone's like, Aussie sounds sexy. Thank you. Exactly. Exactly. I've done a lot of overseas traveling, right? And I've spoken to members of the opposite gender, and I'm very hard pressed to find one that hasn't complimented me on my accent. That's all I'm gonna say. That's all I'm gonna say. Very, very, very hard pressed to find someone that doesn't find the Australian accent attractive. No one ever says, "Oh, it sounds terrible." It's usually quite the opposite. Anyway, let's get back into crypto. Because I don't have that long. I probably only have like 20 minutes left because I'm tired. But we need to like spread some alpha before we leave. Obviously. That's like the point of the show. Spread alpha. Even though the comments are really fun, I really... Your mum doesn't count. Fuck. Well, I'm all out of answers. All right, basically, back into crypto. So yeah, verified on trust. Failures of last year were unique. Survival in crypto is important. Trade-offs that work in the bull market come back to bite in the bear. They were basically his like biggest learnings. So this is his 2023 outlook. He's optimistic. So he thinks that the advantage of the failures. Sorry, he thinks that the fact a lot of people experienced the failures of crypto last year expedited the selling process. So because there was so much pain so quickly, if you wanted to sell, you had so many reasons to sell. And it shook out a lot of the weak hands. So that's why he's optimistic on the fact that a quicker bottom could be set. And then he also said it was a huge benefit to DeFi's fundamentals. Because a lot of what didn't exist now exists and is being used for the very reasons that it was supposed to be used for. And that was expedited by certain centralized collapses. So that's his outlook. And that's not necessarily my opinion, but I'm just kind of like giving you, like, obviously this is what he's saying, right? So he went through the DEX model, which is very interesting. He went through the benefits of the different types of DEXs. And here's the TLDR, basically, to like summarize on his DEX thesis. He thinks in the short term, gains, GMX, perp DEXs in general, Oracle-based perp DEXs specifically, they're going to be the best in the short term because they're very capital efficient. But he thinks long term, eventually, a combination of AMMs, so automated market makers, which is like provided by LPs, plus order book style, which is like basically what every TradFi/centralized exchange uses in real life, they're going to be the main, or at least the most successful iterations of DEXs. So short-term Oracle-based perps, long-term order book AMM-based perps. That's his thesis. Order books have a long way to go, though, and I agree. He also said Ethereum is far superior to Bitcoin. He just sees... He actually said he's never been as bearish as he is now on Bitcoin relative to Ethereum. So he always holds Bitcoin and he's always bullish, but this is the most bearish he's been, even though he's always bullish. Miles doesn't drink. Miles seems drunk. I'm not drunk. I'm tired. I'm not drunk. But I'm speaking slower because I don't know. Like you guys, I usually speak too quick, so it's kind of I'm just kind of chilling. No, I don't really drink. Not much. Sometimes, like I had like a couple drinks this weekend, but I don't like regularly drink. And yeah, it's 2 a.m. on a Monday morning / Sunday night. So like I do these streams extremely late, so I'm always kind of a bit cognitively impacted on these streams. I'm never gonna be at my cognitive peak on these streams. But yeah, so basically, let's get into some of the alpha now in terms of like what he would buy. And when Jose says he would buy something, then like I pay attention. He thinks ETH has a lead in most major categories. Alto ones need to 10x improve ETH's product in order to compete. He thinks Solana's the top for scalability. Cosmos is the top for customizability, but he prefers the app chains. So interestingly, he's more interested in the app chains than Atom, so he wouldn't invest in Atom. He'd just invest in the app chains because they're the smartest community after the ETH community, and he thinks they can move quicker to build their own primitives and eventually can take away from the use case of Atom. But Atom's obviously credibly neutral, so like it's still, potentially not a terrible investment. But in terms of the altcoins he likes on Atom, he likes AstroPort, Mars Protocol, Injective, and what was the other one? Oh, Osmosis. Those four. And then he also thinks 𝗍 is doing some really interesting stuff. He's bullish Sol. I'm giving you the TLDR, so you don't need to watch it, but obviously, like, I'd still recommend watching it to hear his much better explanations. He likes the injective model for 𝗥𝗍𝗵𝗿. He invested in 𝗍𝗍𝗘𝗫. He likes 𝗧𝗟𝗚s. He invested in. He thinks that it will eventually form the global casino. He's bullish 𝗧𝗿𝗘𝗫, bullish Polygon, skeptical about the centralization of the tech. Very bullish decentralized stablecoins, for example, Frax. Obviously, Aves, GHO, and Curve USD are all interesting. And then I asked him at the end to provide one word for certain projects. And these were his responses. So he said, Cardano's vaporware. for all the Cardano maxis out there. Jose is not on the good side. But that's basically what he said. It got me very interested in Cosmos, by the way, because I'm not really that big on Cosmos. And it's not really an area of expertise or like something I've extensively researched, but it's definitely an area that I am starting to research more now that I've kind of started to understand the app chain thesis a bit better. And I do understand it. Like leveraging the hub security, spinning up your own chain, full customizability, full composability, easy to build. Negatives, not as secure as deploying on an L1 with a very large and diverse validator set. So if you deploy, let's say, on Phantom, then you're leveraging Phantom's 100 validators, or maybe it's more. It's probably more now. Whereas if you deploy on an app chain, you got to spin up your own validators. It's like that's a security concern. So like there's negatives and positives, but like customizability is almost unparalleled. Composability as well when it comes to app chains versus L1s, L2s. So I'm very interested in Cosmos app chains now. Been doing a lot of research into Injective. This is like one of my long-term holdings. Now I don't really hold much yet, but like as I said, in line with what we talked earlier about in the show, when I go heavier in terms of long-term spot bags, for sure, Injective's on that list. Osmosis I really like, to be honest. I really like Osmosis. I just think the valuation's a bit obscene. And actually, let me check the TVL. 184. Yeah, it's a bit obscene. Whoa, they had a massive reduction post Luna, obviously because they were a lot of their LPs were UST based, but I mean they still have 184. But yeah, a bit high for me, and an FDV of a bill. Clearly, like the top speculated on app, but I think it's going to become the DeFi hub of Cosmos. To be honest with you, Miles dropping us Melbourne DJs proudly at 2 a.m. Yeah, someone asked if I was drunk. Obviously, not knowing that it's 2 a.m. here. So yeah, I feel like Osmosis will just become like the DeFi hub of Cosmos. I mean, look at all like you got crazy. I mean, it's really cool, man. I love Osmosis. But I just think the valuation's a bit high. ASTRO, 𝗕𝗬𝗓𝗄. I don't think they've relaunched their new token, have they? Mars Protocol. So that's when they launched. It's come down a lot. 10x FTV though. And then you've got 𝗕𝗬𝗓𝗄. I like 𝗥𝗢𝗟𝗘. Their team's been very impressive. I love their what's the product? Fin. They've got Fin Blue. What are their products? Fin Blue. Yeah, Fin's their order book. Orca's probably their main product. Their liquidation aggregator, for lack of a better word. Bow and Blue, which is your dashboard. Freaking cool product, man. And their website looks sick. But yeah, 𝗕𝗬𝗓𝗄 has been impressive. Pretty much fully diluted. But probably like, I don't know, waiting for a bit more of a consolidation at some point. Although it's come down quite significantly, so something I might look at. So that's kind of my Cosmos ones. Anyone else got any good Cosmos projects? Let me know. Someone said 𝗕𝗏𝗄𝗧. I'll check it out. 𝗕𝗏𝗏𝗧. EVM compatible on Cosmos. Everyone started this Ethermint EVM chain built on the SDK. It became clear that we need to build an EVM stack on Cosmos that would unwrap the existing EVM community whilst emphasizing the benefits of Cosmos through interoperability of cross-chain technologies. In 2022, Ethermint became the stepping stone for everything Osmos. Ethermint, as an EVM library for the Cosmos SDK, succeeded in accelerating the introduction of chains, applications, assets, and users into Cosmos. So there's not a lot of dApps here. Not a whole lot of dApps on Evmos. Are there any other EVM? Because I'm not like that well versed in Cosmos. It's not really my area of expertise. Are there any other EVM? And also, Josh, I know I don't want to keep you on too long because I gave 𝗏𝗏𝗃𝗫 the day off, so we'll wrap up in probably 15. But are there any other EVM Cosmos chains that are good? Canto? Oh yeah. I don't love Canto. Why'd my screen just glitch? Yeah, I don't know that much about Kanto. Basically, like, the only reason I say I don't love Kanto is because I just wasn't that impressed by... I wasn't that impressed by the... What did I watch? I watched some video that like was a technology overview, and I wasn't blown away. I thought it was cool. I thought it was innovative, but I wasn't. It didn't grab me. It wasn't like, oh wow, I need to ape into Kanto. I haven't heard of MIR. Was that Mirror? Man, I haven't heard Mirror in ages. Haven't heard of Mirror in ages. Since yeah, it was the Luna one. That was, yeah. I don't know what they're doing now. What have they done post Luna? Look at Phantom Eco. This view's cool. I can move my screen around. It's cool. Let's look at Phantom Eco. Let me just go here. Phantom. This is cool. I actually like this screen. I never put it in the bottom corner, but it's actually like, it's actually cool. Do you guys prefer... I'm going to ask you guys, do you guys prefer the screen let's call this small. So this is small and this is big. Do you like the screen small or big? So Phantom Eco, I think MPX, freaking pumping because they're stupid. And I say stupid because I'm not really in MPX, but I'm saying stupid because everything's dropped in the Eco, but this is still pumping because they're launching soon. So this one's good. I wouldn't ape now, but I mean, if you can catch pullbacks on it, it's decent. Equal decent. Small. Yeah, because the chats get all weird when it's big. Okay, that's better. I think this is cool sometimes. But yeah. Equalizer is in a similar boat. Yeah, my plan hasn't changed since last week. We talked about this last week. I don't know if all of you were watching last Sunday, but I kind of said, look, MPX, equal, rave. Well, it's down a lot. It's down a lot. Solidly, I think is an interesting bet. Yeah, rave's down a lot. It's a name service though, so it's like, the thing with like something like a name service is you're gonna need pretty bullish price momentum from the base token for that to like pump off the back of like an eco narrative. With Phantom right now, kind of observe this channel. I think it's logical we retest 43 cents. $0.43. Test these swing lows. Push up. That's if you're bullish. If you're bearish, well, next support's not till 30 cents. That's a scary thought. Because the bottom of the range and the next support's like, yeah, there's not a lot. There's not a lot there. So yeah, I think a bounce at 43 cents makes sense. Sense makes sense. There's the bloody M again. Yeah, that's why I'm saying. Yeah, damn boy. Phantom and Optimism look the same right now. So it's like whenever you have this M formation, then where the initial breakout was becomes the key support. So for Phantom, that's 43 cents, and for Optimism, it was what? 280? Oh, it wasn't Optimism. I'm forgetting what it was. I'm forgetting what the other M was. We talked about it earlier in the show. But I was forgetting. What was it? Someone can let me know what the M was. Render. Yes, render. Render looks the same as Phantom. Except its zone's at 134, whereas Phantom zone is at 42 cents. Bought Phantom at 17 cents. That's a great entry. And Phantom, if you guys are interested in more in Phantom stuff, I did a show with Michael Kong, the CEO of Phantom, on Friday or Thursday. And what he said, he made actually a few interesting assertions. One of them was that Andre is actually more involved with Phantom than he's ever been, which is crazy. So that was a good interview. If you want to watch that, very good interview. Except I look like an idiot in the thumbnail, so I hereby ban this picture from Crypto Banter. The designer that made the file put that there without my consent. I look like an idiot. I look like a clickbaity idiot. But it's okay. It's not happening again. Someone said 𝗏𝗟𝗃𝗧. Yeah, the AI narrative is interesting. See, this is, you want to know why the AI narrative is interesting? Because we've had a dump across Bitcoin and a dump across a lot of alts. But since the dump, a lot of these AI coins are just ranging. So, I mean, for me to long 𝗏𝗟𝗃𝗧, and clearly AI is not a long-term hold, it's a shorter-term hold. But for me to long 𝗏𝗟𝗃𝗧, what I would need to see is a break of the 44. That's super important for me. I wouldn't long bottom of the range. Why? Well, I mean, range is 9%. It's okay, but a break at the top of the range, has 50% targets on it. So if you are going to long bottom of the range, do so super low leverage and then set your stop at 36 cents. But maybe, wait for this breakout. Or wait for the breakdown and short this thing. But nah, yeah, I don't know. I feel like AI is decent relative strength. And we can confirm this with FET and Ocean. Ocean does not look as good as 𝗏𝗟𝗃𝗧. But it did confirm back inside its range. But I think FET is a good one because that usually leads. Got the graph. Similar but more constricted ranges, probably because it's a higher market cap. And then you've also got FET. FET and 𝗏𝗟𝗃𝗧 look the same, man. Exact same. Exact same. So that's your breakout. Then that's your it's your bearish scenario. A lot of range trading at the moment. Just due to the nature of the market. So if you hear me say the word range a lot, it is because of the fact we are in a lot of ranges. Night, bro. I'm going to go to bed relatively soon as well. Curve or Osmo? Ooh. I mean, obviously in crypto, we never have to pick, right? We have the luxury of being able to just allocate. It's like you could do like 50-50, 70-30, 80-20. If I had to pick and I had to be long one, oh, frick, that's hard. Probably Curve. But yeah, probably Curve because I know more about it. But Osmosis may, like, I need to research more. Yeah, a lot of these AI coins are strong, man. AI is the stronger narrative than a lot of the rest, to be honest. AI is stronger than China. Let's check the China watch list. Okay, a lot of them pumped today, though. Oh, frick. No bear market in China. All right, Coco's looks good. Keys looks good. Filecoin looks terrible. See this level we established? Well, we rejected off it, so exactly as yeah, exactly as the levels suggest. We got that breakdown. That's in no man's land. Wouldn't trade that. CFX looks similar to Filecoin. Get rid of the drawings. Make it cleaner. All right. For all you CFX degens, that is what we're looking at. CTX, Neo. See, a lot of these China coins have like retraced, but like they're still looking okay. I think it's very clear which ones are actually China driven and which ones are pure speculation. I think Coco's looks the best. Key looks the best. CFX looks bad, to be honest. Probably going to break down. Filecoin looks bad. A lot of the China coins retraced heavy. Difference being the AI coins held up a lot better. Probably more of a sustainable narrative. Like the FET looks great. That chart looks good. No, sure, you had an overextension. We came back though into the range. Longer it takes to break down, the less chance we have of breaking down. Remember that. Longer chance to break down, the less chance you have of breaking down. And what about Ali? How's that looking? Retrace its pump, but on support. Adjix and FET look the best. Good night from Perth. It's early in Perth. Not really. It's like 11 p.m. But good night from Perth. Yeah. Just want to quickly remind you, if any of you want to trade, there is a link in the description to a $30,000 ByBit bonus and a $8,000 Bitget bonus. Now, I'm not sure what the status is on the Rolex because I'm just not sure. Josh, if you know, feel free to comment. I'm just actually not sure. I didn't watch Rand's Friday show, so I don't want to like say the ByBit Rolex still available if it's not, because I don't know. But I do know that that's supposed to be ending tomorrow. So maybe still a chance to enter. Still up for grabs. Wow. Well, if you, I mean, we said end of Feb, right? Like, we got to give it away. But let's see. Like, I don't know if Ryan wants to extend. I don't know. Basically, we've been drawing a winner every day on the main show, but people don't withdraw. People don't pick it. So I think we're like gonna start like last day. Wow. Okay, it's the last day. I think we're gonna like ramp up on trying to like pick a winner. For some reason, people don't claim it. It's bizarre. Like, seriously, if you're winning these Rolex, claim it. Send your UID to the Crypto Banter giveaway email, which is in the description. Description of the main show. Has the Rolex been given away? No, it hasn't. How do you potentially enter? You sign up for a ByBit account or a Bitget account. You enter the Discord and you open a trade. One trade equals one entry. That's how you enter. So you got 1 day. So there's links in the description if you want to enter. ByBit or Bitget. Also, you got the 30,000 on ByBit, 8,000 on Bitget. Where are the winning UID numbers? They're usually at the end of round shows. They're always during round shows. No, but the other 𝗲𝗍𝗄𝗧 one wasn't. Did he do it here? He hasn't actually had a live. No. Don't think he did it here. Did he do it the day before? I'm not sure. It's not timestamped, I don't think. Potentially, though. I'm not sure. It is on the main show, though. I just don't... The main show's at 1 a.m. for me, so I don't always watch it to the end. Oh, they're posted to Discord. Okay, so they're announced on the main show, but published officially on Discord. Okay. Thank you for clarifying that, Chris. So yeah, obviously, one of the prerequisites to win the Rolex is to be in the Discord, but you'll have the numbers in the Discord as well. So thanks for reminding us that the winners are also on the Banter Discord. See ya. See you later, citizen. We want alpha, not Rolex. Well, maybe you can get alpha and win a Rolex. So, don't know if this is what you would call alpha, but it's interesting nonetheless. Rune, a token we haven't talked that much about in a while, actually just hit its all-time high TVL in Rune. So, not in dollar value, but in Rune value. That 𝗟𝗲𝗍𝗄𝗧 interview was gold. Yeah, I need to watch that. I've been busy. I was away for the weekend, but I need to watch that. But how many? 52,000 views? Okay. Thought it'd get more, but yeah, need to watch that. Yeah, so Rune just hit its all-time highs in total TVL. Patrick said, I don't hold any yet. Patrick, by the way, great DeFi analyst. He's a weekly regular on my spaces. But it has a needed use case and good integrations. One of the ones I'm monitoring closest. So I'm monitoring Thor as well. This is a long-term bet I'm going to make, but I'm not making yet because I don't see the rush. When I think the time's right, I'll buy some Rune. Yeah, I agree. 𝗟𝗍𝗄𝗧 is brilliant. Really, really good. Someone said SSV. I'm going to head off in a couple of minutes, so I don't know if I have much time to look into this now, but I'll add it to my to-do list. That's a pump. What does it actually do? As you view your token holdings, trade on DEXs and more. Validator infrastructure for developers. So you can build liquid staking on top of their staking pools, right? Interesting. I like that niche, so I'll look into it later a bit more. Wow, it just started raining here a lot. I just like, freaking hell, it's crazy. I just like took my headphone out for a second and I heard like, just yeah, it's crazy, like a huge thunderstorm or something. Crazy. It's middle of summer, so I don't know why the weather's this crap. Melbourne. It's seriously like pouring outside. Rune versus Injective, but Rune is different though. Different solutions really. Miles, it's a sign. A sign to what? A sign to stop streaming? TRL's pumping. AI versus health. Yeah, I mean anything with AI as a buzzword is gonna pump. But Spurs winning against Chelsea. Are they? Chelsea is so bad right now. Wow. Chelsea is so bad right now. It's ridiculous because they've spent $500 million on their team, and they can't even like win a game. Crystal Palace Liverpool 0-0. That was yesterday though. Yeah, that's bad. That's bad. Theta Golden Cross. DNS. I know Step. I think I've heard of this. No, I haven't. No. It sounded like familiar, but I don't know. Super small. Jake Paul or Tommy Fury? Ooh. I'm probably gonna say Jake Paul, but I'm gonna be asleep. I'm not fading Tommy Fury, but I think Jake Paul has him. All right, I think I'm gonna head off here just because it's late. Everyone wants Tommy to win. Yeah, I want Tommy to win. But yeah, I'm gonna head off because it's late, and I'd like some sleep. Well, I'm not gonna be able to watch the fight tomorrow, but hopefully I won't wake up too late. So go to the gym, get a kickstart on the week, which is on 𝗧𝗍𝗄𝗧. I actually do like 𝗧𝗍𝗄𝗧. I think this is cool. Look into that, guys. So, homie wars. People always need to get one more coin out of me. Homie, like, what is it? Homie wars. I don't know, bro. I give up. I'm lazy. I give up. Good night. Just woke up. Good morning. Good morning. Good morning, especially to everyone in the US who's just waking up. Thank you for enjoying the show. Appreciate it. Someone said you'll regret it. I don't even know what the show. I don't know what it is though. It didn't come up on CoinGecko. What about GRT? I went through GRT. Let's just confirm. GRT. Yeah, just I mean, next support's like 13 cents, I'd say. Although you've got like short-term support here. Doesn't look great though. You'd want if you're a long if you want a long, I would want to see a breakout of a break back above 17.5, is it? 17.4. Alright, cool. I did go through Phantom. I went through the Phantom chart before. like roughly 20 minutes ago. And I also went through the eco. Still MPX is my favorite. Awesome. Well, everyone, I hope you have a lovely day or night, depending on where you are. Bang my head on the TV there. I will see you on Wednesday or Tuesday if you're in America for a video that is going to be based on how to backtest strategies using ChatGPT, which is freaking cool. I found a way to actually backtest strategies and build trading box on ChatGPT using TradingView. So that I'm going to film tomorrow, and I think that'll be Tuesday. And then obviously back to the normal lives and stuff throughout the rest of the week. But yeah, hope you enjoyed. I'll see all of you later. And until then, hope you have a lovely day. Peace out.